All right, well, let's get started with this. I wanted to share something with you on it was something I created specifically for tracking the real
What's up,
estate.
my friend?
What's up, buddy?
What's up? Is this okay?
Yeah,
I can get this image. You want to do this image or this image? You tell me now.
I got you.
Okay,
Let me share something with you that I created here. I want you to guide me through this even though I created this, okay?
sounds great, my friend.
It'll be fun. So, I've got this housing crash risk assessment.
Yep.
After I added all of these different leading indicators, and I'll show them to you, we're at a pretty stable, healthy
Yes.
market. There's no crash coming, right? Which is nice to see, right? Based on the algorithm that we added. But here are the key metrics that I added. Number one, I tied this one to the Mortgage News Daily website, right? That's what I decided to use. But everything else I tied to like NAR, year over year homes, pending home sales down, medium home prices, housing starts, because we need to understand that. We don't always add that, building permits, inflation, CPI. And the thing that I wanted to go through, all of these things I added, including all the stocks for all the companies that are housing, right, to see where they're at. But I wanted to show something to you and then you talk to me through it. Okay.
Sounds great.
I'm going to click on compare. I'm going to click on mortgage rate number one. I'm going to click on where's this inflation number two. And I want to click on the treasury. Where is it? The 10-year treasury. I want to click on those. And then let me see if I've got the Fed rate somewhere here and the Fed rate. So now I'm going to open this up and it's going to give me this crazy, crazy graph.
Yep.
Now, if I look at the 30-year fixed and the 10-year treasury, the blue and the red,
Yep.
those seem to go for going back to 1996, they seem to flow together
Yes.
really well.
Yes.
Now, what kind of flows together too, maybe not as equal, if you notice, is the yellow line, the federal funds rate. Like they're close together, but then there's a massive dip. And then
Yep.
they're kind of flowing and then they stay kind of stable. And then look, they're kind of flowing together here, right? So that's the federal fund rate.
The Fed funds rate always reacts to the conditions of the marketplace. So you can see that they're always trying to have those be dovetailed together. Yes, correct.
Perfect. So not too bad. The
Yep.
one that's a little bit crazier is the CPI, the inflation.
Yep.
The inflation's separate, then it goes down, then it kind of goes crazy, and then it's going really high up 2022 because of COVID, and now it's heading down. What's the correlation with inflation that we've got right now with mortgage rates with the war?
The correlation is that just that oil prices go up, it creates an inflationary pressure. So rates tend to go higher because inflation makes everything cost more. Therefore, the return on that investment has to be higher relative to um, the cost to live. Basically, that's the simple way of saying it.
All right, so then let me see if I can grab. You said oil? I think I put in oil in here. Crude, perfect. So we've got oil here.
Yep.
Let me compare. We've got oil and we need the CPI, which is, let me go back to oil.
I think
Crude,
CPI is top right. I think it was on the top right side.
top
CPI.
right.
Keep going to CPI. Oh, that's shelter CPI. So
Oh,
shelter
sorry.
CPI is
There you go.
different. Yeah.
All right. So now we've got blue crude oil and then we've got CPI inflation. Can you tell me the difference between CPI inflation and shelter inflation for this one?
Yes, CPI inflation normally excludes oil, ironically, energy. The other shelter one is basically the cost of living, the affordability.
Perfect. All right. So now we're seeing oil shoots up,
Yep.
inflation shoots up.
Yep.
Oil comes down, inflation seems to come down even further. Where are we at now in the next few months if the war continues? And
Prices go higher with oil prices, CPI inflation goes up. And that's the fear that why the last Fed funds meeting, not everyone was on the same page. There was a couple Fed funds presidents that wanted rate drops, but they know that if they lower the rates, you're going to see inflation go even higher. So that affects the overall living index, basically, of affordability. So the key is people on fixed incomes. The government's always trying to protect seniors or people that don't have the ability to have flexible income relative to the cost and affordability. So that's why they're really protective of that. They always want to do their best to protect a majority of Americans that are not able to live comfortably if that inflation keeps going up. because their wages are not increasing directly with that too.
Got it, man. Okay, that makes a lot of sense. So what do you think happens next with everything that's happening out there?
It's going to
And
take no matter what, this oil crisis takes months to work out. So even if prices were to go down, it's still creating a short term inflationary pressure. Therefore, rates probably are going to remain higher. The government has no indication that they're going to lower the interest rates because it's a temporary. They believe it's a temporary offset here. So that's the way to look at it. And I'm with Danielle Hale right now, also the chief economist at Realtor.com. So she's with me right now as we're talking in a room next door to me,
oh,
ironically.
perfect.
Yeah.
What does she
So I
think
can,
about all this?
she thinks that the government cannot do anything to help lower rates right now, that it just needs to be a natural process we work through. And that
Well,
that
mm,
they can't buy more bonds to offset this stuff. They're in a limited wait and see window, basically.
I think the government can do something, dude. They can
They
stay out
can.
of our business. That's what they can do,
Yes, they
right?
could.
And then all of a sudden, guess what? Shit works.
Yep. Yep.
That's
As Warren Buffett once said, the best way to balance a budget, which I'll bring on the call, is if they didn't pay senators, Congress people until they
yes.
balance the budget, it would be balanced in about a day.
Imagine, like, guys, listen, Congress, Senate,
Yep.
nobody's getting paid.
Exactly. So cool. I'm
Cool.
ready when you are, my man.
Appreciate it, buddy. Thanks, man.
Thanks. All right.